Welcome back to Blueprint for Wealth, and with me today is my special guest, Thomas Seneca of TM Wealth Management. Welcome, Thomas.
Hey, Wayne. It's great to be with you.
It's great to have you on the program today, and we're going to be talking about a special type of wealth management firm that Thomas founded back in 2010. He's a graduate of Brigham Young University. He's a graduate of Columbia Business School, which is really impressive, and he taught as an adjunct professor at Virginia International University for many years. Thomas is a product of Wall Street. He worked on Wall Street. He worked at Goldman Sachs. He worked at Deutsche Bank. And he found that there were certain things that he wanted to do differently, and he wanted to bring some of the benefits that those firms have to his clients. So tell me about how you started TM Wealth Management, back in 2010.
Yeah, Wayne, I'd always grown up wanting to be an investment banker. And so went to Columbia, and from there went to work for Goldman Sachs in New York, and then went to Deutsche Bank out in San Francisco doing tech investment banking. Mm-hmm. And it was a great experience, and I had kind of accomplished my goal. I was on Wall Street working for bulge bracket investment banks. But I learned two important things in my time on Wall Street in investment banking. One is, it's not very conducive to a family. So that's something that was important to me. And the second thing that I learned about myself is I've got to be doing something. My makeup is such that I've got to be doing something I feel has an impact, that matters. Now, of course, I'm sure there's tons of investment bankers out there that would say, hey, what I do really matters. Yeah. And sure, to a certain extent, in a functioning capitalist society, it does. But for me, when you do a large IPO, M&A transaction, you go to the nice dinners, pat yourself on the back, and then you move on to the next transaction.
Right.
For me, I've got to feel like I'm doing something that really matters and has an impact. And while I'm passionate about the financial markets, what was rewarding for me in switching to wealth management was that I could sit across the table from families and individuals, help them make good financial decisions so that their financial resources could have the impact either on them or the causes of the people that they care about. Okay. And really develop that relationship and have it be a lifelong relationship that I can really have that impact on their lives, that at the end of the day we say, hey, you know what? It was great that Thomas was involved in our lives because he really had an impact.
Right.
And so for me, that's where I was able to bring kind of that high finance, institutional quality advice to individuals and families to help them have the impact that they want to have.
So what exactly was it that you could bring from those institutional companies, Goldman Sachs, Deutsche Bank particularly, to a client where you could apply stuff that you learned in the investment banking sense to the individuals that you're representing? And many of them are, top executives.
Yeah, it really was that when you can see kind of, using a term we hear around here in the DC area a lot, when you can kind of see how the sausage is made, mm-hmm. right? When a company goes public or an M&A transaction goes through, you can really understand what the financial impacts of that are and can bring that analysis to the overall portfolio. And in addition to that, looking at things that are outside of the traditional stocks and bonds portfolios, kind of non-traditional assets, when you're looking at real estate, private equity, even now, cryptocurrencies, you start to bring kind of that analysis to say, okay, how does this impact the overall functioning of the portfolio, the risk and return relationship of the portfolio, and help bring that experience and that outcome to the clients. Mm-hmm. In addition, it's just the overall sophistication of the analysis that goes into not only structuring the portfolio, but also looking at everything holistically. As you know, Wayne, in our relationship, looking at things from tax planning, estate planning, their insurances, their risk management, in addition to the money management and financial planning. So it really is bringing all of that together to help them achieve the outcomes that they want.
So how are you able to best service all of these clients that you represent, being a small shop? I mean, you want to be able to bring them the best and the most attractive ideas. So, for example, I heard you mention cryptocurrency. How do you bring cryptocurrency opportunities to your clients today? Yeah,
so kind of when I went from Wall Street into wealth management, having worked in a bulge bracket investment bank, kind of the models there is that you've got to have thousands of client relationships to kind of make the model work. And I looked at it and said, how can you add consistent value to that many relationships?
Right.
And so that's why with TM Wealth Management, you look at, everything you need to know about us is in our logo, right? It says independent. So I don't have a home office saying, hey, this month it's bond funds. Let's make sure that, that's part of the discussion. So we're independent. Boutique to me was important because when you have fewer relationships, you can go a lot deeper. We really get to know the clients really well, their families, extended family, the goals, what they value, and we can help align their financial resources with the things that they value. And then lastly was fiduciary, really having that legal responsibility to do what's in the best interest of the clients. And so by bringing all of those things together, we're going to get a real good sense of what the client needs are, the risk profiles, what they're trying to accomplish, and then structure their resources, their financial resources, to align with the things that they value.
What are the challenges that you've faced as a wealth manager, a small boutique wealth manager, but yet robust with all the services that you provide or try to provide to your clients? What would you say the biggest challenge that you are facing today and you've faced in the last 12 years since you started up this business?
Yeah, from a business sense, I think, and this is probably the challenge that a lot of folks seeking out our services deal with. It's really hard to cut through the noise. Everybody says they're comprehensive. Everybody says they're client focused. Everybody says they do all these great things, but the experience that the client actually has is inconsistent with what the market is saying that they do. And so the real challenge for us has been to try and help cut through the noise to help prospective clients understand how we really are different in the service that we can provide. And that's challenging because without actually experiencing it, it's hard to really understand the difference. The analogy that I would make is anyone that's ever flown private realizes how different all other types of air travel are. And so you really enjoy that experience. It's way different. It's much more convenient. And so without experiencing it, though, you can't really appreciate how different it is. And so that's why when we interact with prospective new clients, we take them through what we call our financial roadmap experience.
Okay.
There's no cost, there's no obligation. It really is an opportunity for them to get to know us, for us to get to know them, see how we deal with things, how we can take them through our process so they can really get that firsthand experience and then say, hey, this really fits for me. And I think the other important thing for us is we're not trying to be everything to everyone.
Right.
We are trying to provide a high level of comprehensive service to a select group of families and individuals that see the value in having someone have that kind of CFO or financial quarterback kind of perspective that can then coordinate all their other aspects of their financial lives.
So do you basically will sort of serve as a quasi CFO for these families that you're working with? Is that
Yeah,
right?
It was interesting. I sit down with a prospective client and they said, we talked about all these different things, but can you lay out for me, what do you do and then what do we do? And I said to them, in the end, you are taking all of your financial elements and responsibilities and pushing those across the table to us, and we take over all of it. Right? Obviously, they're involved and want to be engaged. And the best way, another analogy that I could use, take a baseball team, right? Our clients are the owners of the baseball team. We are the manager of the baseball team, and we decide what players to put on the field, right? If that particular money manager or pitcher isn't performing, then we pull them out and put somebody else in. If that particular CPA isn't doing their job, then we'll pull them out and put them in. Same thing with trust and estate attorneys, insurance, all across the board. And so that's kind of the role that we function as, is we take a lot of time on the front end to really understand what is the strategy, continuing the baseball analogy. What's the goal? Is it to win the World Series? Is it to win the pennant? Is it to, what is the goal? And we spend a lot of time trying to figure out their outcomes that they're looking for. And then we have the team, the players that we can put on the field to help them accomplish that.
So you're the manager of the baseball team. You're maybe the coach of the football team, not necessarily the quarterback, or you could be the quarterback. I'm trying to use a sports analogy where my head's at these days, but that's interesting, and I think it's good because anyone who tries to be everything to all people inevitably is going to stumble on something. You can't be everything to everybody, right? So,
Yeah, I think when you try to be everything to all people, you're in the end you're nothing to no one, right? I mean, it just doesn't fit. And so,
absolutely.
we're not trying to be everything to everyone. We have a very specific type of client that we like to work with, and these are clients whose financial lives are starting to get complex. Right, they've got multiple 401ks, they've got IRAs, they've got business interests, they've got LLCs, they've got real estate holdings, college funds. Maybe it's some private company holdings, maybe stock options. So things are starting to get complex, and they're seeing that they don't have the time or they don't have the interest in trying to put it all together. They've been really good at their careers, or maybe it's their philanthropic efforts, and they say, "Hey, I need somebody that I can trust, that has the competence to pull all this together and make sure everything's working efficiently and working as hard as it can, given the risk profile that the client has."
One of the things that you and I had talked about before we went on air was the financial wellness packages that you provide to some of your clients. Can you tell us a little bit more about that?
Yeah, this really came out of a need for some of the 401k clients that we manage. So we manage their entire 401ks. And we saw that a lot of the younger mid-manager employees weren't contributing to the 401k plan. And so we did some research and started to try to do some surveys and trying to figure out why they weren't contributing. They weren't even getting the match, right? Which in our industry is kind of the free money, right? And so they weren't even doing that. And these are not, poorly compensated. These are very highly compensated people that would be able to contribute. And in the end, what we found is there was a lack of not only knowledge around what the 401k plan and how it fit into their overall financial plan, but there was also a lot of financial stress amongst the employees. They were trying to figure out how to meet their mortgage, how to save for college, how to, cover all the expenses that they have. And even though they were highly compensated, they still had a lot of financial stress. And so with the research, we spent a lot of time developing a program, and what the research showed was reducing financial stress has very little to do with the amount of money that someone has. Because I've got, $1 million clients that have financial stress and maybe a little different than somebody that's $100,000 person, right? And so what we did is went through and started to create a program that talked about this concept of financial wellness and how you can start to put things in perspective to be financially healthy, much like we do with our physical health, right? And so what do they tell us about our physical health, right? Eat healthy, see the doctor every once in a while. And so in financial health, it's the same thing, right? Don't spend more than you make, and work with a financial professional that can help you make good financial decisions.
Has that been a successful program for you in pursuing it with companies locally and nationwide?
Yeah, it's been rewarding for me for a couple of fronts. One, within the organizations, it helps us provide benefits, the financial education and financial advice benefits to people that otherwise wouldn't be able to afford our services. And so it's rewarding in that front. And it was also rewarding in the front that we were able to provide a financial wellness program for something that's near and dear to me and my heritage, to the Seneca Nation of Indians in upstate New York. They have a unique situation that when the kids there turn 18, they get an annuity payment. And this can be anywhere from tens of thousands and maybe even up into the six figures in some cases. And they get it when they're 18. And the nation was having a lot of problems that within 6 months, that money was gone. It was gone on cars. It was gone on eating out, gone on clothes and shoes. And it's amazing how much money you can spend pretty quick when you haven't had the education about how you should be using it. Right. And so we put this program together to help them understand what the impact of investing, saving, managing your spending can have. And so that was personally rewarding for me, not only because I was able to provide that to the Seneca Nation, but also the individuals, 18-year-olds, to really put some perspective around the impact that money could have for them, not only on their lives, but the lives of their families.
You say it's an annuity program. Was it a one-time payment that they got at age 18, or did it continue after age 18?
No, it would continue, but the way that it would work is when they were born, they would start that annuity would start, and it would accumulate, and it wouldn't get paid out until they turned 18.
Okay.
And then all that money that had been accumulated up to 18 would get paid out, and then the annuity would continue after 18, but at a much
smaller amount.
monthly smaller amount that wouldn't be that one large lump sum.
Well, that's a valuable service that you're rendering to your tribe, essentially, and I think that's a wonderful thing that you did. Last question for today. I represent a lot of registered investment advisory firms, a lot of financial planners. It's sort of my niche where I work with a lot of folks like you. I've helped sell them over time, help them grow. I'm seeing a lot of change in the industry today. And my question to you is, what are you seeing and where do you see the financial planning and financial advisory industry going in the next few years, 5 years, 10 years? I'm seeing a lot of compression on fees and pricing. What do you see coming down the road?
Yeah, I'll give you a couple of things that we are beginning to implement and pursuing within the firm. But a couple of kind of broader themes. I think number one, as we talked before, the investment management piece, in our view, is the lowest value add of what we do. We do it well, and it does add value, but in the grand scheme of wealth management, it is the lowest value add piece of what we do. So I think that is coming, that there's going to be more automation for the asset management. And also, to your point, there is movement towards more of a flat fee for service rather than the assets under management fee that we've seen in the past. And that's something that we're looking at and moving towards as well, is that flat fee for service as well. The other thing is that more technology is getting involved. I think clients demand that they have consistent and constant access to their plans, to their investments, and to the analysis and data that can be provided. So being able to pull things up either on a website or an app and really get an update. And the integration for us, I think, is very promising, because we want our clients' financial plans to be the hub of their financial decision making. I'll give you an example. I was with we have clients all across the country, and sometimes they forget there's different time zones. And so I had clients in California, and they were calling me. It was a Friday evening. For them, it was 6 o'clock. For me, it was 9 o'clock. And they called me, and they were sitting in a timeshare presentation, and they were thinking about buying 2 of them.
Okay.
And what was rewarding to me is that they had were sitting in this presentation. We're getting ready to buy 2 of them, and the wife looks at the husband and says, "Hey, you know what? Before we do this, let's call Thomas and get his perspective." That was rewarding for me, because I'd gotten to a level of trust with them and understanding of their financial situation that they felt the interest and comfort to give me a call and walk through that. At the same point in time,
on a Friday night at 9 o'clock.
Yeah, right.
It's fortunate.
Of course, the answer was no. Do not get out, run, and there's better things we can do with your resources. But the other thing is, we looked at their financial. They were able to look at their financial plan and say, hey, if we make this large expense, what's going to be the impact on the other goals that we have?
Right.
And I think that's where the real value is from the planning perspective. If their plan becomes the hub of all their financial decision making, it helps align their resources what they truly value. And that's an important distinction, because a lot of times we're just spending money because it's available and because it's something we want, not understanding that there might be trade-offs between, well, if I do this, then that might mean I've got to work a little longer, or maybe the beach house doesn't become a reality, or something else. So the integration of technology to really make the financial plan the hub of all financial decision making is exciting for us.
That's fantastic. I like your summary, and I happen to agree with it. I think flat fees are the wave of the future, and I think technology is driving a lot of behavior and decisions today in the wealth management world. And I really appreciate your joining me on Blueprint for Wealth. This has been a great session with Thomas Seneca of TM Wealth Management. Thanks for being my special guest today, Thomas.
Happy to. Anytime, Dwayne.
And thanks for listening to Blueprint for Wealth. Join us next time for a special topic and a special guest on Blueprint for Wealth. See you next time.